Bitcoin is about to test a very important zone on the daily time frame. So you might want to stick around for this bad boy. More importantly, ladies and gentlemen, we're going to be breaking down critical levels in various assets across the board. I'm going to look at that mad PEPE coin that everyone's talking about. And we're going to look at potentially a few altcoins that have made some aggressive moves to the downside, to the upside, to see how we can exploit any profit-making opportunities using the hybrid system. What's good, ladies and gentlemen? Welcome to tonight's live. We're going to be going on a mad one. Bitcoin has been on a mad one. And as always, I'm about to bring you some flavor. So if you are new to the channel, be sure to like and subscribe. It's going to be a good one. Check it. All right, then. So, ladies and gentlemen, Bitcoin. Right, in front of you is a projection that I had done just a few days ago. It was on Saturday, and on a Saturday, what I do with the patrons of the channel is I give them a heads up on where I expect Bitcoin to go. So this is where we are right now. Bitcoin, 27,790. We go into that projection itself, and we can see that Bitcoin has fully recovered all vector candles, all zones that we anticipated. And in tonight's live, I'm going to show you how I came about this idea that a stop run was going to play out to lead us to lower prices. So let's get with the flavor, ladies and gentlemen. Let's clean up our chart and then start a whole new story. So first things first, the critical zone that I'm talking about. All of you make your way over to the daily chart itself. And once you've done that, press hey ya or type 1 and let me know if you're all looking at the same thing. So here we go. That critical 27,600 zone was yet again tested only a few moments ago. Now, we've been looking at this zone for quite some time, and we have said if Bitcoin breaks from this area, it's going to flush through to the downside. Now, we saw a little bit of a break, but they teased us, and they let us know that there may be just support. But remember, we had a red vector candle right here, because inside of this area is what we understand to be market makers' positions. So a lot of people went short from this zone. Price drops. Everyone's running for the shorts. Quickly sell, sell, sell. Bitcoin mad. Shorts being opened. Mr. Market Maker is going long. He reverses price back up, fulfills the vector candle region right here, and then, of course, goes back into that zone. Because remember, when price is rising, that means people are buying, but the true power is behind those who are selling. Because you can't buy if no one sells. There's no market, okay? So this is exactly what the market maker decided to do. He decided to mark price lower, realize a return on his investment, and then start the whole process again. Now, this is where it gets tricky. If Bitcoin breaks this 800 EMA, which is currently, if we zoom in, look at the precision right now. That is despicable. Like, come on. Look at that. Look at how they're both kissing. All right? There's a nice little snog fest happening right now with the 800 EMA on the daily time frame and the 50 EMA on the daily time frame. All right? This is a very important zone. And if Bitcoin cannot sustain this, we're going to start working to lower zones, ladies and gentlemen. Okay? It's all or nothing at this point. So now what we've got to do is we've got to pull it all back and say to ourselves, well, where's the next logical point for Bitcoin to end up where we would expect people to start stepping in? But more importantly, where can we expect people to start getting concerned? You see this zone down here? There's a lot of confidence inside of this area, okay? That's where people originally came in and started seeing Bitcoin pumping. The bottom was in. That's where they started to buy, okay? Now, logic suggests that by a principle of price action, they break this 50 and the 800 EMA in the chart, we're getting ready to roll over towards these zones. Now, we have got quite a few important days coming up, ladies and gentlemen, and it's not going to be looking good if we don't hear what we want to hear, all right? Check this out. We have got the FOMC on Wednesday. Oh, my days. FOMC statement, federal funds rate, and the FOMC press conference. We are looking for the Fed to say we're going to increase interest rates and then we're going to pause. The market will see that as an opportunity to get back in. So from now all the way through up until the FOMC, we might see price action drop across the board. So then that would be fitting. Why? Because we know that when prices are dropping, we know that they're buying. Because they're not going to be buying as prices rising. No way. They sell into higher prices. Are we all on the same page, ladies and gentlemen? Type 1 if you are listening. Or if it's too loud for you, turn me down. If I'm speaking too fast, speed up your listening. Now, we've had some bout of information today going into the charts. We've had ISM manufacturing data coming out, suggesting that there is a little bit of an increase, but still a contraction. A reading below 50 suggests that there is a contraction in the economy. A reading above 50 suggests that there is expansion. Now, the ISM manufacturing prices have risen. That's going to be a bit of a problem, because if manufacturers are increasing their prices, that only means that inflation's going to be a bit of a problem for us, and we don't like inflation, okay? We've already got the issue across the board saying that stagflation is probably going to be something that has not been fully priced into the market. Well, what does stagflation mean? Stagflation means economic growth is slowing down. We know that is evident with the data that's been coming out regarding the manufacturing sectors. So you've got the Philly, you've got the Richmond, you've got the New York, and then you've had the ISM manufacturing prices across the board. It's all showing negativity in growth in the economy, all right? So if stagflation is going to be an issue, that means inflation's increasing. That means unemployment is increasing, all right? And we've already seen that unemployment rates are going up. Okay? Or should I say the claims are moving up, given with the exception that only recently, last data said that unemployment claims were down. So the markets, or should I say the Fed's thinking, what is going on? Haven't got an idea. How are we going to hit this story of inflation? How are we going to get to 2%? Okay? You've even got Elon stepping up the pad, and he's suggesting that loads of dead banks proves more rate hikes will cause a severe recession. All right? But the market wants a recession. This is what the story is, because if the recession is coming, that means the Fed has done its job at making sure that they keep a tightening policy to reduce inflation. We need unemployment rate to go up. We need the economy to slow down. We need that inflation to come down. And the only way we can do that is if we stop everything. And the only way we can stop everything is by making money harder to obtain. That's what we're looking for. So then we go back into the charts themselves and we say to ourselves, okay, so by the principle of Bitcoin dropping today, well, let's just go over to the S&P for a second, because we know Bitcoin has a positive correlation with the S&P. If stocks go up, Bitcoin goes up. If stocks go down, Bitcoin goes down. Now, the S&P has made a nice move to the upside, but it also come back down. So it's dead in the zone. And we're probably going to expect price from now going into Asia, going into tomorrow. We're probably going to see a lot of sideways action happening. Why? Because they're waiting for the Federal Reserve press conference. That's where the flavor is. Because if the Federal Reserve comes across in any way, shape, or form hawkish, which means that they favor tightening conditions, that means increasing interest rates, tighter fiscal policies, then the market's going to see that as a problem. Things aren't going to be looking good. Everything comes down. However, if they're dovish, then that means that there could be a pause in the interest rates. They're not going to keep increasing it. We may have met the terminal rate, which leads us towards the Fed pivot. So what's a Fed pivot? Pivot, by definition, it's when the Fed changes its fiscal policies. All right? So right now, the latest fiscal policy is keep increasing interest rates. But if they decide to change that and declare that they're going to stop, that means we've hit the terminal rate. Now we're going to be looking at decreasing interest rates. Is it going to happen overnight? Not necessarily, but the market will price that bad boy in. So from now, going into the FOMC, these are the zones that you need to be aware of assets across the board. So we're going to go back into Bitcoin. We're going to then look at some altcoins. We're going to do Ethereum. We're going to look at that madness of PEPE coin. Now, I know you guys are seeing this being hit left, right, and center, and I'm going to be showing you why you have to be very careful with altcoins, because they are fast moves that require you to take your money and run, okay? It's literally a gamble. That's what I think altcoins are. They are a gamble, but if you get in at the right point, happy days. You realize a return, great. It's all about liquidity runs. So check it. Bitcoin on the one-day time frame, all right? Let's break it down. Go to the 4-hour time frame. What do we see Bitcoin doing? Now, look, given that Bitcoin has been dropping quite significantly, you can see the vector candles. They've come back into everything right here. They're rolling over, all right? But there's one more zone right here we've got to be careful of. This is the 26,000 zone. If they break beyond this region right here, because last week Bitcoin was consolidating inside of this zone, okay? So we need to understand what's in that area for us to justify Bitcoin going to that area. Well, let's go over to the high block itself. This is the last 12 hours of Bitcoin. People buying and selling futures markets, in essence. So are they going long in Bitcoin or are they going short in Bitcoin? Now, we can see that there are a lot of shorts being opened in Bitcoin and the 12-hour time frame. At the top side, we've got Bitcoin orders at 29,125, and we've got $492 million worth of short liquidations. Drop down a level, we've got 28,675 with 462 million, and you can see that 473 million at 28,575, but the nearest zone right now is at 27,975, which currently has $436 million worth of long liquidations. Now, let's just go into the 7-day chart and make sense of the madness right now. Check this. You can see Bitcoin on the 7-day chart. These guys are holding on to dear life, all right? You can see that at 26,950, we've actually got $5 billion worth of long liquidations. Take your money. Pay yourselves if you are in longs. Don't wait to see if it can go there for you to add your margin, because it might continue to go down from that because they're hitting liquidity. They are recovering previous positions from shorts that they opened when price was going up. Isn't it mad? It shoots up, it comes back down again. That's the nature of the market because it's money moving from one point going to the next, all right? The next critical point is at $5.2 billion worth of long liquidations, which sits at 26,450. So all of you now, and tell me when you've done this, go and mark off on your chart 26,450. Let's do it together. 26,450 will take us towards this zone there or thereabouts. Happy days. When you've done that, type 1 so I know that you guys have actually done it. All right? So that's where the liquidity is for the long liquidations, okay? We know that there are shorts inside of this area, and until we're given a reason to believe Bitcoin's going to come back up towards this zone, we don't need to pay attention to these short liquidations just yet. Now, look, if the FOMC works out great and they tell us what we want to hear, then there is a good chance that the market could shoot up. You've got these analysts over here suggesting that if they change the theses, or in other words, look, they're using different words now. They're not saying Fed pivot. They're saying theses changing because they know the word Fed pivot could actually encourage investors to start going all in. Look at this guy's face right here. He's happy as Larry. Nice set of teeth right there. He's smashing it. But more importantly, what we've got to be mindful of is if the Fed does suggest that there is a pause and it's going to be for a long time, they are effectively hoping that the market adjusts itself and the inflation comes down, which will give everybody a reason to believe everything's going to go up. So there could be a possibility going into the FOMC that we're going to see some treacherous price action. And I said it on Saturday to the patrons of the channel. And if you haven't joined, go check it out. It's the start of a new month and you won't be double charged anyway. They've stopped all of that in Patreon. So you can join at any time in the month and take advantage of the projections that we put out. We smashed it. We absolutely smashed it this week, ladies and gentlemen. We caned it, and we did the Forex one as well. We're talking about Euro. We actually smashed it this weekend on all our projections. Now that you've done that, I can see that happy days. Cool. So 26,442 is a point in the chart where we know there's a lot of liquidity right there. And remember what I said. The idea is that you want to go towards or trade from zones where there is going to be a reaction. Well, because we're trading in uncertainty and we're not dealing with the past, we're having to project moving forward. We've got to assume that the market maker is going to want to take some of this liquidity. The sooner he takes it, the more of an idea that I've got a belief that if the FOMC works out favorable for the market, everything's going to go back up. You're playing with fire in this situation, ladies and gentlemen, okay? And in the next few minutes, I'm going to be going into some altcoins, so get your lists ready for me because I'm going to be diving in. I'm going to be using some data here that I've got on the next movers in altcoins, and I'm going to show you exactly what I mean about making sure you take money from the charts and don't leave it sat there like a wet fish, hoping that it's going to moon out to the upside. I mean, it may be, but look, take something off the table, okay? Now, so we know that liquidity is right there. Cool. So let's just look at Bitcoin. This is on the 4-hour time frame. Spike lower, come back up, full recovery of the green vector candle. Happy days. Now let's go into the smaller time frames. 1-hour time frame. So what do we see? Bitcoin's only come back into the same spot it was. It's come back to a reaction zone. Why? Because look at this. This is where the green vector candle came in to trap the traders who were short, made them pay the price, and instantly reversed it. If you joined in on that live last week, this is exactly where we projected out the V-shaped play. So the principle would assume that if Bitcoin's going to try and do the same thing tonight, you would expect that to happen. But last week, we didn't have the worry of FOMC. So they may keep price stagnant, okay? going into the smaller time frames, because it looks like if we're not going to see that many big moves, then we might actually see some smaller moves that we could try and exploit. All right. So we go into the 15-minute time frame. What do we see right here? Well, Bitcoin looks like it's trading away from the 50 EMA, and I know a lot of the guys will understand what's going on here with the cloud. The cloud right here, this 50 EMA, it's a 50 EMA moving average, okay, exponential moving average, and it's got like these Bollinger Bands around it, and we use this cloud to give us a heads up on the actual momentum of a move. So usually what you'll find, guys, if you go back in the charts, you'll see that every time price comes back into this area right here, this cloud is going to act as a resistance or it's going to act as a support. So where are we? Well, we've had a volatile move to the downside. So the principle assumes that we're going to expect Bitcoin to try and move back up into this zone and test the interest inside of this area right here. That's where we get information. Right now, it's a gamble, okay? Some of the more advanced traders in the hybrid system are probably going to take certain positions in these areas because they have seen many, many times how these scenarios change, okay? And how they can actually adapt themselves to it, all right? But for the guy who is new, you're waiting for effectively Bitcoin to come back up into this zone to give you information as to whether or not it's going to create the pattern. And the pattern suggests rise, retrace, continuation. But in this instance, for price to go down lower, we have got ourselves the drop, retrace, continuation. Where do you see that in the chart? Quite frankly, you see it here. Look at the structure. And I challenge you all, go back in the charts and try and find this behavior. Look, drop, retrace, continuation to the downside. Your entry point in principle would be here. One entry zone right there, and a little bit of an advanced entry would be right there. As you prolong yourself in the learning of the hybrid, you'll start getting used to taking advanced entries inside of this zone, okay? So we're waiting for the Sydney market to open. We're waiting for Bitcoin to give us information about the move back up. Now we want to go into smaller time frames, and we're going to be going into the alts very shortly, and we want to know, has Bitcoin got the capacity to keep on moving up? All right. Now, remember, when you change time frames, the 50 EMA is represented differently. OK, so if you go on the 200 EMA on the 15-minute time frame, the 50 EMA on the 15-minute time frame is actually the 200 EMA on the 5-minute time frame. So you'll see this on the 5-minute is the 200. There it is, there or thereabouts. So that's the 50 EMA right there. OK, now price is going to want to come back. We trade, one of the strategies that we use, okay, is trading towards vectors. So where are our vector candles? Well, these color candlesticks here tell you the market maker is doing something. He's either going long or he's going short with the green vector. Now we've had price stabilize in this area. So we are assuming that if Bitcoin can hold out above the 5 and 13 EMA, which is this area right here, if it can hold above these two moving averages, we would assume that momentum is picking up to move price higher. So our first zones of interest would be this area right here, which is the 50 EMA cloud. More importantly, a profit target hypothetically would be towards this red vector candle zone right there, because that's an area where the market maker had trapped retail traders to believe price is going to go lower. He made them go short. Okay? Are we all on the same page, ladies and gentlemen? Mad love, man. I checked in with you people over the weekend. I hope you've had a lovely weekend, guys, because we have got a wild week ahead of us, and we are going to be going live tomorrow, 2 p.m. GMT, as always, and which is 9 a.m. Eastern Standard Time, and I will be going live for the FOMC statement and the press conference at 7 p.m. GMT, which is roughly around 5, 6 o'clock, I believe, well, about 3, 4 o'clock Eastern Standard Time. So don't worry, I've got you guys covered for that. So make sure you subscribe so you get notified about those live streams, okay? Cool. Right, so let's get into some altcoins. I'll quickly go over Ethereum for you. Here we go. Right, so Ethereum moves a little bit more volatile than Bitcoin. We've got a bit of information now with Ethereum, what we don't have on Bitcoin. So look on the 5-minute time frame. You see Ethereum has left us a little bit of a clue that Mr. Market Maker might be coming back to this zone. So all of you, mark off this green vector candle if you do have the hybrid system. If you don't, get over to tradersreality.com and download it free of charge and add it to your charts. There's a step-by-step process on how to do that bad boy. But we now see Ethereum has left us a little bit of a clue in the chart as to what is likely to happen later on. Because quite frankly, we look down below, we don't really see any volume. So this might actually act like a stop move. In other words, market maker is forcing price down lower to grab traders' interest at going short. He instantly reverses price and he shakes out all the 100x traders who have been running shorts because they've been waiting for the proof that Bitcoin is going to go lower. And the way you identify that sort of scenario is you pay attention to the length and the speed that they create these big candlesticks. The great thing about this hybrid system is you can start to understand how things are moving based on how quick they create these candlesticks, okay? And the faster they create these candles, the more manipulation is happening. You see these red bad boys right here after a prolonged move to the downside. As you can see, Bitcoin has done, or Ethereum has done nothing but drop. We've got 3 hits in principle, which says that we've got one zone, which is where retail traders said, you know what? It's not going to drop too far. I'm going to buy the dip. The second zone, oh, wow, I just got shaken out of my shorts, out of my longs. I'm going to go short, or I'm going to wait until I see more confirmation. And then there's the third drop where price has come back down aggressively, which would then lead price to start reversing back up and shake out those retail traders who are in denial about Bitcoin going down any further, okay? Now, that being said, with Ethereum, just going to the 1 hour time frame, you can see that it's come back into the vector candle zone. It hasn't broken down beyond the wick. And if Ethereum also breaks this region, now it's a little bit different for Ethereum. So if you go into the daily time frame, you can see Ethereum has already broken the 50 EMA, and that's a problem. But the 800 EMA is all the way down here. But Ethereum is a little bit more volatile than Bitcoin. And what you will find with Ethereum is it usually moves to a zone first, and then Bitcoin usually follows suit. Okay? So keep an eye out on Ethereum. It's broken the 50 EMA cloud. And if it stays beyond this 50 EMA cloud zone and it stays inside of this area right here, there is a high chance that Ethereum is going to continue to work its way lower beyond this cloud. And if that's going to be the case, then we've got ourselves a little bit of a problem. Remember, we've got 2 days until the FOMC actually comes out. Now, let's get some flavor on these altcoins. First things first, I'm going to actually look at BTC coin, this mad fruitcake of a coin that is taking the crypto world by storm. So let's go and have a look at it on BitGet now. Again, classic example, okay? You see an altcoin starts getting traction. Everyone's talking about it. We've got the early adopters inside of here, which are happy days because they know that they're going to start promoting the coin. And then the coin starts getting a bit of interest. Is it another meme coin? Is it this? Then all of a sudden, Twitter go mad for it. BTC's starting to show his face all over the place. And then everyone decides to step in. That is a classic climatic volume at the highest point in the chart, which is designed to what? Make you buy it so that they've got someone to sell to, because the principle says you can't buy if no one sells. And that's the truth. And as long as you've got that in the back of your mind, you're not going to get caught out in any mad price action that's going to shake you off your positions, because you're going to be trading with the market maker and not with the retail trader. Are we all on the same page, ladies and gentlemen? Has everyone attended class today? Man, I'm waiting for this week, guys. Honestly, I cannot wait for this week. It's going to be a wild, volatile week. So, back with the altcoin story and what to be aware of. The first thing that you guys want to be doing is you want to be finding altcoins that are either trading aggressively away from the 50 EMA and or from the upside, or below the 50 EMA. Okay, so I'm going to start the party off by having a look at a little bit of data on this chart, Genidata. All right. And this platform just gives me altcoins and Bitcoin and Ethereum on usual volume. You can see climatic moves. What did we say? Climatic moves about BTC. BTC is taking up all of the charts. You can see on the 5-minute time frame, it's up 6%. Then, of course, on the 5-minute time frame again, and which is in futures markets, that's actually down 5%. Okay, and then it's still up 5% elsewhere. So there's a lot of volatility in BTC coin, and people are taking money off BTC coin. So those early adopters are taking the profits because it's cheap enough for you to just leave your money in there. You are the sell liquidity. You needed to be in BTC coin when this bad boy was down here where the early adopters were in, okay? Funnily enough, you look left and you see it's recovered the vector wick. Go into the where was it? When it first started, there was a vector candle. No, where was it? Here we go. It was on a MEXC. Look at this. They recovered that wick. Absolutely fantastic. Here's another coin I can show you. ENJU. USDT. Where's that bad boy? Where did that thing go? Where was it? I saw it. There was a coin. It's just recently listed, and it had a wick. Let me see. Is it on Binance? There was a wick on this bad boy, quite a big wick, and then it just completely come back up into it. Absolutely fantastic. Anyways, let's have a look at some altcoins for you guys. Give me your altcoins in the chat. Here we go. And I'll start having a look right there. EDU USDT. Now, what have we got right here? EDU USDT. All right. Okay. All right. Listen, this is a classic one. Go to the 4-hour time frame of this coin. There's not even a 50 EMA on it. This is a huge move. They're looking for sell liquidity. Okay. Now, either this coin has got potentially great purpose or something huge has happened with this. Please let me know in the comment section because I want to know why we've had such a great move. And it looks like it was listed on Friday. So it's had a nice little pump and they've sold off from the upside and it looks like they're holding out in this zone. Okay, be very careful because as we go into the lower time frames themselves, we are getting clues that they're likely to come back up into these candlesticks. So just be mindful of that. But as we go further and further into the chart, you can see that we are edging towards the start and they're going to want to take the money from it because the guys that picked up this coin from before, they've made their money because that's where they purchased in principle. Now they've got all this liquidity that they can sell into. This bad boy's at 4 cents and now it's at $1.23 and you're telling me that no one's going to sell this coin? We see it happening on BTC. That's the truth. All right. Let's go and have a look at some altcoins that are actually changing. So we got XRP, we got BBC, and it's just had $16.4 million worth of liquidity coming in. So let's go into that. Let's go back into that. BBC USD, BBC USDT, Bull Bitcoin Club. Happy days. So what we got there? All right, then. So it's been around for a little while. Go to the 1-hour time frame. Quite a choppy asset. Don't know much about this bad boy, but all of a sudden it's just shot up to the upside. Sell side liquidity. People have got the coin. Early adopters are right in here. Happy days. And they've just come back up. Now everyone wants to jump on the train because it's really cheap anyway. So why would they even be concerned about it? But don't go into the charts with that logic. It's above the 50 EMA. That's good news for us because we know that we can get potentially retraces back down because they're going to want to eat some of these vector candle zones right here because this is where profits are. This is where money can be taken because the profit for the market maker is your margin. Okay. What's this? Check CP. I can't even see that. RND. Yeah. RNDR USDT. I know that bad boy's been showing some flavor in the charts. Tina, can you do Lily as in the stock? Yeah. Is that the stock market you're talking about? I'll check that out for you. Eli Lilly. Yeah. Cool. So here we go. We've got RNDR. I know a lot of people are trading this bad boy. It's like following Bitcoin in principle. And we've got this rollover in the chart coming back into the vector candle region right here. Given that altcoins, right? Listen, Bitcoin vector candles. So these green and blue and red candlesticks, right? They are points of interest in the chart that market is usually going to go back to. Why? Because that's where liquidity was first committed to induce people to step in and buy. All right. Now, when they come back towards these zones, two things can happen. They can either flush through these zones and break down at speed, or they can attack those regions, retrace, put more people into the idea that it's support, and then continue with it all the way to the next zone. And then you'll see exactly the same thing happening again inside of that asset. All right. So they'll keep on doing this structure. Okay. Now, RND token has broken down beyond the 200 EMA on the 1-hour time frame. And you can see that the moving averages, this is another thing. The moving averages are fanned out, guys. That tells you there's been a lot of volatility in the asset. Okay. Now, because there's that much volatility, there's going to be more volatility to bring it back down again because they need to bring it back into the fray or the median. This is the median because all three of the moving averages were compressed together. Let me show you this area here. It's a compression. There's a contraction. It's getting tighter and tighter. And as long as that gets tighter and tighter, like the principle of an elastic band, when you release, bang, this bad boy shoots off. Okay, and that's exactly what they did. The same way they brought it down, the same way they're going to bring it back up. So then we look at this chart, we then say to ourselves, okay, do we just blindly go short? Well, no, because it's been dropping down. So what are we waiting for? We're waiting for price to stabilize a little bit, okay? And as long as they stay beyond the 50 EMA cloud on the 1-hour time frame and the 5 and 13 EMA to the downside, as long as they stay within these regions right here, then you're only favoring lower prices. And as always, probe your bets, okay? Scalp into them. Test the market. Don't put the house down until you are proficient and comfortable with the exposure. Don't put all of your account capital into one trade. You do not do that. That's not standard practice. That's the practice of someone that just wants to go all in. Moonboy, I have nothing against the Moonboy, but the moon boy can be replaced with another moon boy, okay? There's a high turnover with these moon boys, and they don't last very long, all right? So you want to be the guy that's just testing. Hypothetically, you would say to yourself, okay, if I decide to run a short from this area, what if it just completely collapses? Well, great. You've got a little bit of capital exposure. You're in the trade already. So then you'll then get more information about the move down. Because if it does drop from this point and comes all the way down towards this point, you've effectively got yourself profit from this zone. Now, you might not have lots of money into it, but you fundamentally have made money on the move to the downside. You're then looking for, when can I add to it? So if you hypothetically have, let's say, $1,000, for example. Let's just round off figures. $1,000. You wouldn't commit all the $1,000 to the trade because one wrong move, your account's wiped. Done. Taxi. Order one. Give me some telephone numbers for some taxis. Okay? So you put a little bit of a percentage. Try it. 10, 15% based on $1,000, hypothetically. Yeah? And if you can't make a return on the 15% that you use of your account, then you know you're wrong in the trade. Now, let's assume that you have made a return on your 15%. The next move back up is going to tell you whether you're going to put another 15%. Why? Because price would have then seen the moving averages come lower. You now have an area of resistance that they can bounce away from. And if the intention is true that they're going to continue lower, they will reject this zone and drop down. No different to Bitcoin's behavior earlier on today with the drop, retrace, continuation. Do you see it in this chart? Yes, you do. Scroll up. What do you see? You see it happening. Here's the proof. You've got the drop, the retrace, continuation lower. Did they fully get above the cloud? No. They tried to go above it, but they recovered the vector candle to the left of the chart because that's where people brought. What a perfect trap. Making them buy the dip. Isn't that what you do? You buy the dip? Yeah, man, it went up to the upside. Happy days. This bad boy's going to keep on going. Green vector candle gave us the clue. That's not the case. That vector candle right there told us that market maker is building shorts. Why? Because this bad boy's been moving up non-stop and it hasn't moved up anywhere away from this zone. So any green vector candle that appears up inside of these zones is going to make you question whether or not the market maker is preparing to get price lower by making you believe it's going higher. It's a psychological game because the only reason you're going to buy is because market maker wants to sell. But market maker is going to give you a reason to buy. And you want to be careful of that. All right? If it's doing what everyone's doing, you're probably being set up. Okay? Cool. What else have we got? We got some other coins. Solana. Let me have a look at Solana for a split second. How long are we in this live for? 32 minutes, ladies and gentlemen, and we'll be getting this to an end. Here we go. Solana. So Solana's come back down into this zone. We were looking for the 20 zone. We're waiting for that projection to come in at $20.38. We still got a vector candle region right here, and you can see Solana is trying to hold out inside of this zone with the potential of them trying to come back up into this vector candle. So now listen, Asia is going to open later on, and in the next... Well, actually, it's actually happening very soon. So at 11 o'clock, the futures markets will open for the S&P. So any of my traders who are on S&P and NASDAQ, you can see that the S&P is holding out. It's coming down to a key critical moving zone. Now, if the S&P continues with the narrative lower, Bitcoin's going to have a lot of pressure on it and it's going to go lower. The futures markets open in the next 20 minutes, so just be mindful of that, guys, okay? You can see the S&P has got these vector candle regions right here. You can apply the hybrid system anywhere, okay? You can apply it to stocks. You can apply it to futures markets, corn, coffee, you name it, okay? They're always going to have the ability to use the vector candles, all right? Because it gives us the idea that people are buying and selling. We're just looking for the traps, okay? Now, let me just go and look at the stock that my guy was talking about. I'm guessing it's this one, isn't it? Let me know if it's correct. So Lily, moving up. This is concerning, man. Look at this. $405 a share. This bad boy is moving up and it ain't stopping, and it's consistent with climatic volume because as you can see down below, we've had a good little earnings announcement. They sold off on their news announcements right there. Now they've brought back up, but volume is starting to taper off at the lows. So just be very careful. And across the board, guys, you're going to get this sort of behavior happening with the marketplace. It's going to happen because the FOMC is coming out. All right. Let me just quickly go back into the 5-minute time frame. Is Bitcoin moving up? There we go. Look at that. Beautiful. Straight into that vector candle region that we just projected. Happy days. All right. That's what we've been waiting for. That's an example of the hybrid system right there. Okay, and this is what you learn when you join the Patreon. It's pinned to the top of the chart. We've got some private streams happening for you later on in the week as well, Tuesday and Wednesday. Those are the days that I can do the private streams after the live streams in New York. So this is the kind of thing that you're going to get in there. You're going to learn how to do this for yourself. Okay, cool. Other than that, I'll just quickly go into some Forex. Have I got any Forex gangs in here? All right. Any Forex gang? Let me know in the comments. Type in the chat for my Forex gang. We have got Euro holding the majors. I saw your comment, bro. They're holding the majors, moving the minors. What does that mean? It effectively means that they're trying to consolidate the major assets. Now, when we zoom out on Euro, you can see you've got big structure here. Let me get rid of that. You can see Euro is gone trading sideways. It's a horrible time for trading. Believe me, it's just a tricky time. You see how they come up to the vector candles and they just come back down to the vector candles. This is consistent with accumulation, distribution. So some of you guys might be aware of that bad boy, but you've got to just be careful. That's what I mean. Don't leave too much money in the charts. Take some profits and bounce, okay? Now, when Euro goes up and down, we know that the dollar dominance is coming into play. Now, there is a word on the street suggesting that the dollar dominance is going to start going. They're going to get the BRICS, and these guys are going to start a new currency. Ain't going to happen until, let's say, about another 50 years' time. We ain't going to see it in our lifetimes when the dollar is completely removed. They'll try it, and this is a common thing. It's like, tell me what president hasn't had an assassination attempt. They're always going to try it, and they'll always do the same thing with the dollar. But remember, the dollar, or should I say the Federal Reserve, is going to have a bit of a problem coming close to June, when that is the end point for them potentially defaulting on their debt. I don't think they're going to let that much money get wiped off and crush the economy. They're talking about extending the debt ceiling, so they're only just putting the problem further on, all right? So let's just look at the dollar dominance now. When the dollar dominance goes up, Bitcoin in principle comes down. Why? Because if you're not buying Bitcoin, what are you doing? You're holding dollars. Well, if you're not using those dollars to exchange to Bitcoin, then that means the value of the dollar is increasing, because it means more people are holding on to dollars. That's where the dollar dominance chart comes into play. So when you're trading, guys, always look at the dollar dominance to give you a heads up on how likely they're going to go from one zone to the next. Earlier on today, we were projecting the idea that the dollar dominance was getting ready to come back up into these vector candle zones. They did just that. They rolled price back up. So that means that we can set up potential shorting opportunities. So if you look at it like this, when dollar goes up, Euro goes down. And when Euro goes up, dollar goes down. So if you are going to scalp or you're going to day trade, put both of these charts up in front of you so you can get a feel for how they're moving. Okay? Now, I'm going to quickly break down Bitcoin one more time. I'm going to give you some levels on the Bookmap. We've got Bookmap right here suggesting where the liquidity resides in Bitcoin and what we could actually see later on tonight. Look, what have we got? 27,600. Now, what did we say earlier on about the 26,000 zone on Bitcoin? We know that there's liquidity all the way down at 26,000. Where was it? On the high block. We have got at 26,950, we got $5 billion worth of long liquidations at 26,950. Okay. So let's go into the chart. 26,950. That takes us towards that zone there or thereabouts. That's a region there. So we go into the Bookmap, and what do we have here? So at 27,000, now listen, stick with me on this one. This is the journey that it could take. What liquidity is it going to grab before it tries to get towards those liquidations? How many traps is it going to set? Because you can see Bitcoin, this is the VWAP line right here, all right? Now, Bitcoin usually moves away from this point to the upside, from the downside, because it suggests to us that institutional investors are buying below the VWAP in an anticipation to sell again above it, all right? So the principle says that in this area right here, this area is a huge area of interest. Now, we're not going to know its support or resistance until they send it there. Why? Because you can see on the right side here, if I show you, if you can move my head, there we are. I move my head right here. You see that area? That area is where people placed orders but canceled them, all right? They didn't get filled, which means that if price is going to come back to that zone again, there's a good chance that they could actually come back in and then try and find support to then lift price back up again. So we're at this point in the chart, which is why the logic suggests that Bitcoin could initiate the drop from this high. We got a drop, retrace, continuation. Okay? That's what could happen. And we're already starting to see some of that flavor coming in. And this is on the 1 hour time frame. All right? And then we zoom out and we see down below, we have got bags of liquidity stacked at 27,200. We got 733 Bitcoin orders. Then at 27,000 on the nose, we have 704 Bitcoin. The law says, this is the Tino law, all right? If Bitcoin breaks this 800 EMA and the daily 50 EMA, right there, they break this zone, which is priced at 27,640. Bitcoin's rolling over, ladies and gentlemen. And that's the truth. Because they would have tested that zone once, they'll want to go to it again. As long as it can stay above this area, then fine, we're good. But we're seeing tests. They're trying to attack and arrange. That's what they're trying for. Because there's money down here. We want to see if that money's going to come back in. And that's how you validate price moving from one point to the next. All right? So, ladies and gentlemen, I hope you've enjoyed yourselves. If you are new to the channel, hit the like button, subscribe, because we are going to be going live tomorrow. We've got a busy week ahead of us, and we're going to be doing these sort of breakdowns every single evening, Tuesday all the way through to Thursday, maybe on a Friday as well. You know how it is. But I hope you've enjoyed yourself this evening, ladies and gentlemen. I'm looking forward to it. Again, if you are new, get to the Traders Reality website to download the hybrid system indicator for free and check out the Patreon if you want to learn more and deep dive into the hybrid system. I will check in with you all later on. Mad love and respect, guys. Take care of yourselves. Peace.